Assalamualaikum and hello everyone. My name is Siti Fatihah binti MALEH. Mention number S59310. So this individual assignment is for financial accounting and reporting stream, and I'm from K3. So today I will explain about the answer for case 2. Okay, so the first question is the total finance charge and the effective interest rate. So to calculate the finance charge, so the first is the sum of installment, which is 44,000. We multiply with 5, so we get the amount of 220,000. Then we minus with fair value of motor vehicle, okay, which is market price, and then we get the amount of 200,000, and the total finance charge is 20,000. So for effective interest rate, we use the formula IRR. Okay, we use IRR formula, and then after we calculate, we get the answer 5.01%. For question B is the lease receivable schedule. Okay, so at this schedule, we have here opening balance, interest income, lease payment, closing balance, and also total. So for opening balance, we already have in the question, and the installment also the question already given. So to calculate the closing balance, opening balance 200,000 we plus with interest income, and we minus with lease payment, which is 44,000, and we get the closing balance, which is 156,000. So the closing balance we bring forward to the opening balance to the next year. So to calculate the interest rate for the next year, the opening balance that we calculate, we multiply with total effective interest rate, which is 5.10%. Then we get the amount 7,809. Okay, so same goes like the others. Okay, the calculation is same. So for closing balance also same about the calculation. So closing balance for year 1 is 119,809, because the opening balance we plus with interest income 7,809, and then we minus with 44,000, and then we get the answer. And also the same way is we bring forward, or we bring the closing balance in the next opening balance, in the next year opening balance. Okay, so this is the total of interest income, and this is the total of lease payment. So the last question is about journal entry. So the journal entry is about at the date of sale of the motor vehicle. Okay, so first is we debit cash 220,000, and credit revenue the same amount 220,000. Then we debit cost of sale 120,000, and credit is inventory 120,000. Next is recognize the receivable on hire purchase. So debit is lease receivable 220,000. We can get this amount at this schedule at question B. So we credit cash 200,000, and we also credit and earn finance income 20,000. So next is to record upfront lease payment from customer. So we debit cash 44,000, and we credit lease receivable 44,000, and this amount we also can get at question B, which is the amount of installment. And last journal is to recognize interest income at effective interest rate. For the end of Q1, we debit unearned finance income, which is 7,809, and we credit interest income 7,809, which is the amount we can get also at question B. Okay, at the first year, at the year 1, okay, the amount that we already calculate at the schedule. Okay, so that's all from me. Thank you.